Hello and welcome to this live edition of Capital Ideas TV. I'm Mark Bunting, the publisher of Capital Ideas Media. Our guest is Fabrice Taylor, the publisher and founder of the President's Club investment letter. Fabrice has 6 small cap ideas for you, plus he'll have investing strategies. He'll also give you his take on Aphria after flagging their investing practices a year and a half ago on this show, and in the wake of Vic Neufeld, or at least the company saying that he'll be stepping down as CEO in the next couple of months. And he'll be taking your questions. Many of you have sent in questions already through Twitter and other means. We're seeing some activity already in the chat on the YouTube channel, which you're watching right now. Now, let's tell you before we get to Fabrice that we want to remind you and let you know that Capital Ideas is more than just video interviews. We produce a free daily morning note that you can receive to your inbox to get you ready for your investing day. It contains analyst initiations, upgrades, downgrades, stocks on the move, and news of the day. It's also a good way to keep up to date on the latest live streams that we're doing and company interviews that we have in the works. Now, Capital Ideas also produces the weekly Capital Ideas Digest, where we curate actionable investment ideas based on the research that we pay for to arm you with the information you need to amplify your returns. Some of our winning ideas the past year include Viamed Healthcare, Drone Delivery Canada, and Kronos Group. Immediate access to the digest is for paying subscribers only. Free subscribers receive the digest on a delayed basis. You just have to go to capitalideasmedia.com and you can sign up there. Now, we'll get to Fabrice in just a moment. First up, a bio board. Fabrice has his Chartered Financial Analyst designation. He is the founder and publisher of the President's Club investment letter. Now, this has made a lot of money for investors over the years. Fabrice tells me he's planning to revive the President's Club, and he'll tell us more about that. Fabrice was a longtime investment columnist for the Globe and Mail, where his stock picks would routinely move after he wrote about them. He's also a regular guest on BNN Bloomberg, and that's where he joins us from. He was just there on Market Call with your old friend Andy Bell. How are you, sir?
I'm good, thanks. How are you?
Very well. You're doing double duty here, so we appreciate it.
Didn't have to take my makeup off. That was nice.
Perfect. Yeah, walking down the streets of Toronto.
I've never looked better.
Absolutely. You look scintillating. So, just so everybody knows, we're going to do kind of an overview of the markets here with Fabrice. We'll drill down on some of his ideas. We'll get to your questions as well. We've got Darren Howard in there today in the chat, Julius Cabrera, many other people, Monica Tennis. All right, so we're going to be getting to a lot of these questions. Let's start, though, Fabrice, with an overview of what has transpired in the markets the last couple of months. Mm-hmm. Painful for a lot of people. Why and how do you think it happened, and where do we sit now?
Well, I think if you're talking about the general market, the big boards, I think quite simply, no one has ever seen, at least it's been 10 years, 11 years since we've seen a tightening cycle, and people are starting to wonder what happens when, if low interest rates fueled the bull market, the greatest in history, or at least one of them, what happens when they start going up? And the natural conclusion is it's bad for stocks. So I think people panicked and sold stocks and didn't really think about it, just wholesale selling. I also think there's just general nervousness. Everybody knows that bull markets only last so long. And this one's 10 years. It's one of the longest, if not the longest. And people just got nervous and sold things willy-nilly. In the junior markets, so I have a theory, which is that the weed sector was so powerful, so enticing, and really appealed to the madness of crowds. And I think it created a lot of new investors who had never previously invested, and maybe they invested in ETFs, but certainly not in the venture market. But it also sucked a lot of money away from pretty good companies that trade on the venture markets. I mean, you've got weed companies trading at valuations in the 9 figures, 10 figures, that have nothing. They earn nothing. Meanwhile, you've got small companies trading at 40 million, 50 million valuations who have revenues, maybe not profitable yet, but they're growing. And I think that there's an opportunity now for investors who've done well in weed to take some profits and start looking elsewhere, because the weed game, I think, it's getting a little long on the tooth. It probably has, a little more run to it, especially if the U.S. starts to legalize federally or legalizes federally. That'll give it a last kick. But other than that, I think that the bloom is off the rose. And also, when they legalize in the States, you're going to get, it's the best companies, and they tend to be American. They're going to attract the most attention. You're going to see a massive market in the States. And maybe you see some acquisitions up in Canada, but a lot of these Canadian companies, they're going to disappear. They're just going to disappear. Either they'll take some lowball bid or they'll go broke. So I think you have to be mindful of that. Weed's exciting. It's been great. It's been great to me. But I've already started shifting away from it. I have a few select investments left in it, quality ones. But the days of making money on junk, I think that's over.
So, as you alluded to there, part of your theme or your main theme are stocks that have been ignored. They're good businesses, good value, and the markets are just ignoring them, and we'll talk about that. Now, I remember us talking years ago on BNN, and you said your one regret in 08, 09 was that you weren't positioned well enough with enough cash.
Yeah.
So did you learn your lesson this time around?
I sure did.
Yeah.
If we're going into a recession or a bear market, this will be the fourth of my professional career, my investing career. And the first three, I was basically fully invested. There's no worse feeling because you know stocks are cheap. I used to write columns in the Globe in November 08, March 09. It's time to buy. I had no money because I was fully invested. I hadn't learned my lesson. Now I take profits, and I'm often early to take my profits, but I'd rather be early than late because my job as an investor is to generate cash, not to generate boasting rights or paper gains, but to generate cash, put cash in my pocket. So I don't mind selling a stock for $10 and watch it go to 20 if I paid $2. What do I care? I'm up a lot. And you have to train your mind to think like that. Most people have this sort of fear of missing out and this regret, sellers regret when they sell too early. Don't think that way. Take your profits and be happy with them. And the 5 times return is excellent. The average indices return is 7. So if you're making 5 times your money, you're doing very well. Don't worry about it and be liquid. I'm 75% cash now, and I've been at that level for quite some time though. So I've missed out on gains, but I don't really worry about it. I'm ready, and when the market turns, which it will, I don't know when, but it will turn, and not just 20%. I'm talking there's going to be a big turn here. I'll be ready, and it'll be a beautiful thing for me.
And back to that analogy of buying a $2 stock, it goes to 10. If and when it's at 10, do you sell all of it? Do you sell part of it?
Honestly, if I buy a stock at 2, on the way up to 10, I'm peeling it. It really depends on the situation, but I'll be selling some at 3. I'll be selling some at 4. My main goal is to get my capital back. So if I put $100,000 into a name, I want to get that $100,000 back. That's when I start to breathe easier because I have no capital at risk. Now it's house money. And it goes up a little more, I take a little more off the table. It keeps going up, I take a little more off the table. So it's not like I buy it at 2 and sell it at 10 to use our example. I'll be selling it as it goes up, and by 10, I'm out, and it goes to 20, I don't care. I don't even follow it anymore. I don't want to know. And that's the way I invest, and that's the way I tell people to invest, because most of the stuff that I touch tends to be high risk, volatile, fragile, brittle, I call them. Little companies that, things are going great one day, and all of a sudden something happens. You get broadsided by bad news or some bad development, and they're small. They're not diversified, so they can't cope with it. And it's risky, so take your money off the table. Understand your risk. The riskier it is, the faster you want to get your capital back. Speaking
of risk, it's a case-by-case basis, but are we at a riskier time now, or, and it sounds like you may be leaning this way, are you seeing more opportunities in this kind of a market?
Here's a funny thing. I think that there are opportunities in smaller names because they've been abandoned, because of the flood of money into marijuana. And let's face it, some of these marijuana stocks are just dumb. They're frauds. I mean, Aphria was a blue chip in that space, and look what happened to that. The CEO resigned in disgrace today. They've engineered some bogus takeover from a company that they were closely associated with, or at least some of their investors are. I don't know if you watched that video from the short seller, but it was pretty damning. That was some very, very good work. I noticed today that they've said they've covered, they've moved on, they made a fortune. Stock has rebounded, Aphria has, and I'm glad for those who own it. But if you think that's bad, there are far worse ones out there. And so you have to be careful. And listen, somebody once told me, he introduced me to a marijuana company, and we walked away from the meeting, and I said to him, "This is the worst deal I've ever seen in my life." He said, "Don't be quick to judge. Sometimes you make the most money on the worst deals." So I did it. I invested at, I think, 5 cents. I never recommended it, I never talked about it, but it went to $4. So he was right in that sense. Of course, it's a 0 today. So in a bull market, you make money on anything, and you make often money. You make the best money you make is on bad deals. There are good deals in weed, and I think the bad ones, we're having a nice little run here, a rebound. But if you're in the bad ones, be careful, because eventually the tide's going to go out on you and you're going to be stuck.
All right, we're talking to Fabrice Taylor, the publisher and founder of the President's Club Investment Letter. We're taking your questions. We're seeing Peter Bell in the chat here. He's got a question. Kyle Radke, Analysis E. We'll get to those in just a moment. Now, Fabrice was talking about his theme of the day, these abandoned companies, good companies that the markets are ignoring. So let's start with one here. And this is one that you did very well with about 8 years ago. It went from 25 cents to $3. Then it sort of fell on hard times and went sideways to down for a long time. But now you think Athabasca Minerals is back. And why do you say that?
Right. So first of all, they're based in my hometown of Edmonton. It's easy. I've been up to their operations in Fort McMurray, in that area. They operate gravel pits. They own some. Some of them they just manage for other people. That's a nice little business. Up in the tar sands, you use a lot of gravel. Those roads in the mines, they're made of gravel. And as you deplete your mine, you get further and further away from the plant. That means more roads. That means lots of gravel, because those trucks are heavy. You got to build big beds. So there's always demand for gravel. That's a bread and butter business. But what excited me back then, it was the third stock I ever recommended in my newsletter at 25 cents. And it went to $3 in about, I think, 3 years or 4 years. They have a frac sand deposit. And it's permitted, it's large, I've been there myself, and it's ready to go. And you probably know that Shell Canada, or Shell, has green-lighted their LNG plant. Everything is tickety-boo. There's a little bit of protest going on right now, but the government's on side, the native bands are officially on side. Justin Trudeau needs this deal. He needs it. He's bragging about it because everyone said you destroyed our industry. And now he's running around saying, no, I didn't. Look, this is the biggest single investment project ever in Canada, which is true. It's $40 billion. Now, it's going to happen. Okay, and no one believes it anymore because of all the negative things that have happened, Trans Mountain and all the other pipeline problems. There is a pipeline here. This is gas. It's a lot greener than oil. It's not heavy oil. But think about all the frac sand they're going to need up in that area, in the Montney. It's millions of tons of it. We have a frac sand deposit, Athabasca Minerals, of which I'm one of the biggest shareholders now. It's been appraised at $30 million. They have $5.5 million in the bank cash. The market cap is 13. So there's going to be huge demand for frac sand up there. And although the actual use of the sand won't be for a couple of years, the offtake agreements are going to be signed this year, or started to be signed this year. That means a producer says, I'm going to need a bunch of sand, and he wants to secure his supply before he starts producing, otherwise he's in trouble. So you're going to see news, I think, this year, even as early as this spring, I'm hearing from sources, that they're going to get offtake agreements. So Athabasca is poised with the big deposit called Firebag. They just bought 50% of another one, which is actually in basin. That's very important. That word in basin, you're going to hear a lot about that word. It's right where the producers are. Now, the cost of frac sand, and believe it or not, in northern BC, they bring it from Wisconsin, and it's about $150 a ton. 70% of that goes to the railway companies to ship it. Very little goes to the producer, because it's sand. It's not like it's expensive. But the cost of shipping it that far is very high. Imagine if you have it right there. You're still going to charge $150 or maybe $140, but you don't have to pay 70% of it to the shipper because you're just trucking it. It's rubber right to the plant. So I'm really bullish on this. The last time I recommended it, as you said, it went from 25 cents to $3. Not overnight. It took 3-4 years. Things didn't work out. The management team has been turned over. They're brand new. They're very, very impressive. And they bought a lot of stock recently. So I'm very bullish on this, and I think it's the kind of place you want to be. This is my kind of stock. I don't really want to own the producer of the gas roll. I want to own stock in the guy who provides him with the pickaxe, the shovel, whatever he needs to produce, because they always need that no matter what the price is. So that is a very interesting stock and trading for nothing because nobody cares.
All right, Athabasca Minerals, which has actually been moving pretty well the last couple of days. That was a pick of Fabrice's in our 2019 digest, or best ideas of 2019. All right, so another top pick that you're talking about here is Clean Seed Capital.
Right, Clean Seed has technology that improves planters and seeders. These are machines that farmers use to plant crops. And they've been around for a while. They've been proving up their technology, and I've talked to some farmers who think it's very promising. But what really turned my head, I've known the story for a few years. I just bought stock last year in the fall for the first time at roughly the price where it is now, maybe 2 cents more. Gary Anderson is one of the co-founders of Ag Growth International, and he and his partners built that into $1 billion business. He's still on the board of Ag Growth, but he's no longer involved. He's now the president of Clean Seed. This is a guy who understands agriculture, obviously, better than you and I ever could, and who's built businesses and succeeded at building capital markets businesses. And he's taken a job, not even as CEO, but as president, the number 2 of. And so I called him and I said, "What are you doing there? What?" And he said, "This is a very amazing technology. This is game changing." He's invested over $1 million of his family's money in this. So right now, the technology is ready. They're working on a merger with a manufacturer in the U.S., a private company, and if it happens, then the deal will produce a company that generates tremendous revenue and has manufacturing abilities and skill. We're waiting on financing. We haven't heard yet. They're trying to finance the deal with debt. I'm trusting Gary's connections because he's met a lot of lenders in his life. When that happens, the stock's going to pop. It's cheap right now, but if this deal happens, when it's announced, when it happens, Gary tells me it's not a question of if, it's when, this stock's going to multiply over time. So I like that one a lot too. And again, no one cares because it's not weed.
All right, Clean Seed Capital. Now, Fabrice touched on Aphria earlier. He'll have more to say about Aphria after we take our first break in a while. Now, let's get to some of these questions. Now, the one name that keeps coming up, we get so many questions on, like from Analysis E, for example. He wants to know about Gratomic. This is the company with a graphite mine in Namibia. They've got a mine in Canada, but the big one's in Namibia. You visited that, I want to say, more than a year ago now.
Yeah.
So it seems just on the surface, seems like one of those promise stories, and it's geared towards electric vehicles, but maybe hasn't quite delivered yet. So where do we stand with Gratomic?
So I've been an investor in Gratomic for, I think, about 3 years now. Stock hasn't really done anything. I mean, it trades decent volume these days, and it can move from 8 to 20 cents, but it hasn't really had the big move yet. I did visit the mine in Namibia in May of 2017. And it's a past producer. At the time, it was a past producer. It's now produced some, but it had been a mine, small African mine with very manual labor. But I'll never forget walking in there. It's underground, and there was a column, a black column of carbon, graphite. Like, it reminded me of the Acropolis. Just a big column holding something up. And I'm thinking, wow, I'm not a geologist, but I just thought, if they've got columns like this, veins like this, it's got to be rich. On my way home, I stopped in Berlin. There was a conference, a materials conference, and I met a guy who runs a company called Perpetus out of Wales, and they have something called a plasma furnace, and they buy graphite and they turn it into graphenes, and these guys are very successful. Their graphenes are being put in tires, in all sorts of different applications. They have revenue, they're private. And I said to him, I'm told that you're fond of this graphite, and he said, well, I've seen it, I've tested it out, and it's high quality, more tests to do, but it's very good quality graphite. It works for what we're doing. Since then, he's expanded his relationship with them, and it's working out okay. So for me, that confirmed that this is good quality, that there is a market for this. They've raised money recently. We're waiting for an offtake agreement. That's always the holy grail when you're in a mining deal. I don't know when it's going to happen or if it's going to happen. There's scuttlebutt about it, but there has been before. But if it happens, this stock is going to multiply, I think, I hope. So that's the hope there. They're cashed up. They've got real assets. They've got at least one customer who's very happy and who gave a testimonial of the quality. And so I'm very hopeful that it works out. And again, nobody really cares because it's not weed.
All right. Now, Sheldon Inwantosh is the chairman of Gratomic, correct?
Yes.
And he also has a company, 3D Capital, IDK, which is an investment vehicle.
That's right.
So we're getting questions from some of our viewers and subscribers about IDK.
I don't know a lot about IDK. I mean, Sheldon ran Pine Tree and built that up into a fairly large investment fund, publicly listed one. The first time I ever talked to him, it was It was about, I was a young reporter at the Globe and Mail, and I talked about a company that did genetic, they could read genes. It was a new way of doing it, and I'll never forget it. When I called him, it was $5, and it went to 200. And I remember thinking, wow, and I didn't know much back then. I was young, I was in my 20s, and I remember thinking, wow, that's impressive. I wish I knew how to buy stock. So he has a nose for the high risk, high return opportunities. He was on the trip to Namibia with us. I got to know him a little bit. He's a shrewd guy. He knows how to negotiate. I know he did some work with Gratomic. There was some royalty holder and he got rid of them. They were a bit of an annoyance. So he can bring a lot to bear on these stories, and it's valuable having someone with experience like that and capital markets skill around.
All right, another name we're hearing a lot about from our viewers and in the chat here, East West Bioscience. We interviewed the CEO, Rodney Gillineau, a while ago. I know the company has hired a new CFO recently, and I thought they seemed quite interesting. On the surface, they have a lot of different products with, I'm trying to remember now, hemp-based products. That's right. Within creams and lotions and oils and so on. So give us an update on East West.
What I find interesting about East West is that they do have the products, but a lot of people do. And they have a plant to produce, but a lot of people do. But they have a retail strategy that's kind of built in. They bought a health food chain called Sangster's.
Right.
And I like that idea because it gives you that customer-facing ability to sell stuff. It's hard to sell. It's easy to put stuff in a bottle and put a label on it. It's not that hard. But to actually sell things is hard, to build brands. So I'm curious to see what happens with that. I think that they've got a decent shot at it. We'll see what happens. I like the concept. I like the thinking. They're acknowledging the commodity nature of just producing it and putting it in bottles and slapping a label on it. That's not hard. Building a brand, though, that's hard. But if you have shelf space, then there's more hope, and you should be able to make the job a lot easier. They were in talks at some point about acquiring a small pharmacy chain as well. So again, pushing that retail strategy, I think that's a bit of a differentiator. And you see the big boys buying, I mean, Aurora bought a piece of High Tide, put a pretty big investment in there. They got a piece of the old liquor stores in North America, which changed its name. They put money in that. So they understand.
Alcanna.
Right. So they understand the value of having, the importance, not just the value, the importance of having retail, because the commodity end is the grow. But the margin side, in my mind, is the retail and the branding.
We just saw some of their brands, checking out their website there, and they also have pet food, hemp-based treats for pets, and human food, and the creams that we discussed as well. All right, so the questions that keep coming in. Fabrice has talked about Gratomic, 3D Capital, East West. Hope you enjoyed those. We had lots of questions about that. We'll take a quick break here, more with Fabrice Taylor. And as we head to break, we want to tell you about a special offer from Capital Ideas. It's a free 30-day trial to the premium weekly Capital Ideas Digest. This will give you immediate access to 4 issues, including our best ideas of 2019, which came out this week. These are 12 top picks from some of the brightest minds in Canada. If you sign up for the free 30-day trial, you also get to peruse our entire archive of weekly digests. Just go to capitalideasmedia.com/30-day trial. That's 30-day trial, lowercase. You're watching Capital Ideas TV live with Fabrice Taylor, founder and publisher of the President's Club Investment Letter. When we come back, Fabrice will give you more opinions on the Aphria situation. About 19 months ago, he questioned the company's investing practices. More of his best ideas and your questions right after this.
Right now you walk inside a truck and you see multiple devices. You see a fleet management device, you get a two-way radio, black box, tablet of some sort, front camera, $6,000 to $10,000 worth of equipment. We're shrinking down to less than $1,000 in one device. The change in the cabin is just dramatic. It's just much, much safer for the truck driver to be able to use one device. Really what we're doing is we're creating a new environment and a new technology that has not been seen to date in the market.
RavenQuest Biomed is really 3 things: innovation, science, and opportunity. Orbital gardens are really cool technology. We've now converted them to the point of which the plant rotates around a center light. What we have done is created the control technology and changes to some of these gardens which allow for more nutrient impact into the plants. So what it allows for us is to get high density within a very small space, which overall is going to lower our capital costs and our operating costs.
We feel like we're the wave of the future in terms of how people test for things. We anticipate being the first sample-to-answer instrument that can process up to 22 pathogens at a time. Whatever you want to test for, you can do it on your own. You don't have to ship it away to a lab. You don't have to have an expensive microbiologist. It's something you can do on site. You collect that sample, you input it into the machine, you hit a button, an hour later you get the result you're looking for.
Welcome back to Capital Ideas TV, live with Fabrice Taylor, the founder and publisher of the President's Club investment letter. Put your questions in the chat section on the right side of our YouTube channel, which you're watching right now. Fabrice has given you two of his best ideas so far, answered some questions. He got 4 of his top picks to go. Now, he did talk about Aphria a little bit there. We're going to talk more about it now, but before we get his current opinions on the company, Fabrice was on our very first episode of Capital Ideas TV in June of 2017, and at that time, he felt that Aphria seemed to be acting more like a hedge fund than a licensed producer. They were making what he considered some baffling moves, and we want to take a listen now and have a listen to and take a look at what Fabrice said at the time.
My suspicion is that somebody's benefiting from these trades. I mean, if you're in these penny stocks before Aphria announces their placements, and which drives the stock price higher, you're going to do very well. So I'm not suggesting anything untoward from the company, obviously, but it's just suspicious, and there are people who keep showing up in these little penny stocks.
Any names?
Well, there's a company called the Athabasca Corporation. They put together Aphria. I know that because I was in that one early, and they are popping up as investors and consultants to some of the companies that Aphria has invested in. So again, don't know what's happening there, but clearly the opportunity for profit is there, and I think it's very bad optics for Aphria to be doing this. It doesn't reflect well, in my view, on management.
So Fabrice, based on what you said there, do you think now, as things have transpired over time, Was that sort of a microcosm of something that of a culture where they're comfortable with the gray area, and over time we see Nuvera, then we see the Latin American assets, and the way this has sort of turned into a debacle for the company?
Look, I mean, my opinion is that they got lazy and dumb. They were making so much money doing this that they didn't care anymore. And to do this after you list in New York, now you're facing the SEC. They're bad, they're tough. They don't take prisoners, you know. And so what they're doing now is what everybody does when they're in trouble. They're resigning, and I think they've engineered a takeover because there's just too many ties between themselves and this company. And it's very small, that company. I forgot the name of it.
Green Growth.
Green Growth, which has one store. That's it. But it's well financed and it's well structured, and we'll see what happens. But this is typically what happens when the wheels fall off a deal like this, if you will. And it wasn't that hard. Like, this is what I want to say to people. You didn't have to dig that hard. I'm not that smart. I just looked at a deal they did, and I thought, what's going on here? This is not a good sign. And it's funny because after I was on BNN and I was on your show, and then I got a call from the company, and I had a meeting with them, and I said, look, Vic, why would you sell your stock 4 months after you invested in it? Why would you invest at a premium to market? Why would you sell it after 4 months and lose $6 million? And he said, well, there were some things that we didn't know when we made the investment. And I said, well, then you're admitting that you're not very good at due diligence. Then either way, it doesn't look good on you. In any case, you can draw your own conclusions. I don't think people are dumb. I hope the investors in Aphria do okay. I hope that this deal happens so that they can, not get burned on it. But there's more of this going on out there. This is the most sophisticated of them all. But you have to be careful. It's a hot sector, and hot sectors attract, shenanigans, and they attract lots of money. So don't feel like the entire sector is bad. It's not, but just be careful with what you do with your money. That's the advice you want to take away from this.
That deal you're talking about at the time was Cannabis Medical. Now, I also want to ask, we've seen Constellation Brands invest in Cannabis Growth. We've seen the Altria investment in Kronos Group. And so that's big-time money, big-time companies. Is that potential over now for Aphria? Have they missed that boat?
For Aphria, for sure. No one's touching this thing now. That's why they're selling. They want to change. They want to rebrand it. But my question is, why would this company, this American company, want to buy a Canadian greenhouse operation? Now, I grant you that they have cash and they have investments in other firms. But why would they want to do that? And will that hurt their chances of getting an investment? I don't know. We'll see. There's a wealthy family that's backstopped this financing to $300 million, which means that
Schottensteins, I guess.
Yeah, which means that if no one takes it up, they'll take the whole thing. Now, whether that's true or not, we'll see. No, Aphria's chances of getting that big, vital investment from a major, tobacco or booze company or even beverage company, they went to zero the day that short sellers report came out. Look, if somebody calls you a liar, you can respond to it if it's not true in 10 minutes. It's been weeks now. They've been saying we're going to prove these guys wrong. They haven't done it. All you have to do is say, here's our bank records. That's it. It's not true. We are, and then sue the short sellers. They've done none of that stuff. So draw your own conclusions, but I think they're fairly obvious.
And full disclosure, if you're a longtime viewer of Capital Ideas TV, we interviewed Vic in this studio. We went to Leamington and did a story. They were very, very gracious to give us a tour of the whole place. And they requested some of our videos, so they compensated us for that, which may be on their website for all I know. But you just take everything at face value. And we don't want to really go down the rabbit hole. We have a bit, but we don't want to go. We don't want to make the whole show about Aphria because there's so much he said, she said, and there's so much.
Afria's over now. It's done, right? It's done, and investors should just look for better ideas. And there are some in the space. There's some high quality ideas. There is something. Look, when companies like Constellation Brands come out and say this is the biggest opportunity we've seen ever, they've got people who are smart who do the analysis. So you're getting free research from them, and if they're willing to write these checks. That is a great endorsement of the industry. Now, that doesn't mean that every company is going to do well. You got to be well positioned. You got to be well run. But there is an industry here, and just because Aphria blew up doesn't mean that there's not money to be made.
All right, speaking of cannabis, I was going to move ahead to a few general questions, but let's stick with that just for a second. We do have, I'm trying to find it here, but we do have some questions about Huge, for example. FSD Pharma, this is one that we did a video of in June of last year. Stock went up 400% in 7 weeks. We'd like to think we had something to do with that, and you did as well. It sort of brought it to the market and uncovered it to a degree. It's come back since then, but still well up. So where do we stand now with this hydroponic? Are they producing yet, or they want to?
They are in small doses to get their licenses. They're close. It sounds like they're close to getting a sales license. They've got a good group of shareholders because it's held in. I mean, it went from 15 to 90 after our video, and they had a lot of other promoters. And by the way, as an aside, let me tell you something about how to pick stocks in the venture market. Promotion, especially in this business, is very important. A lot of people frown on it, but when there's 100 weed stocks on the junior markets, how do you get attention? You need to spend money. And I knew that they had a big budget and they had some good people that were going to tell their story. So that's what gave me the confidence to recommend it. They had lots of budget for hiring storytellers, basically. And that is important. I disagree with people who think that's not important. It is very important because it lowers your cost of capital. The higher stock goes, the lower your cost of capital is, the less dilution shareholders have. That's important. Anyone who says it isn't doesn't understand finance. Look, right now, obviously you would have taken profits. The stock goes from 15 to 90. You're not hoping it goes to $90, right? Or $9. You've done well. You get your original capital back. You've got a nice return. At this point, it's a wait and see. When they get their license, I'm quite sure that they will. They've got some, what I like about Huge is the people who put it together are on the inside. They're directors, they're officers. So they're not blowing out stock. They believe in this and they're going to see it through. So I like that. You see lots of things like MedMen getting sued. I think it was today because of the amount of money they're pulling out, the executives, which is it's just shameful. So I like it. And also what you don't know about Huge unless you read through their filings is they have made some strategic investments in other companies. So you're buying a portfolio when you get Huge. You're not just getting that big grow up in Coburg. You're getting pieces of other companies that are quite promising. So nice thing to hold. You don't want to buy it when it's running hard, but at 15 cents, it was a good deal.
Now, these investments that they're making, these are long-term investments, presumably? They're not flipping them quickly?
No.
Yeah.
They're not Aphria. They are making long-term investments in retail and in bioscience. These are years out. So they believe, and that's a good thing, because when management believes, you got a better shot at making money.
All right, speaking of making money, let's try to make some money with Seatt Mobile. This is another idea of yours. We've had Mark Seelenfreund, the CEO and founder, on, I want to say 3 times. They did a very cool demonstration of their flagship product here. They're now with Bell. I don't know if they've struck that US deal yet, but they're delivering on what they said they would do. So
yeah.
Tell us, and here's another one where the markets are kind of going, they're not really responding.
They have some legacy revenues. I think the last quarter they're shrinking. Legacy revenues, that's the definition. They're basically old technology that's declining, and they haven't been offset yet by the new product that they have, the Uniden EV350. And it's taking longer than anybody hoped for, but it was one of my top picks on BNN today. I've been a shareholder for some time, and I think he's an amazing CEO. I think these guys are smart, and they know what they're doing. They're with Bell. It's not easy to get on the shelf at Bell, believe me. It's hard, it takes time, it takes lots of testing, you got to jump through a lot of hoops, and they did it. So you're going to start seeing Canadian revenues fairly soon. There was an interesting story about how Bell won a customer over from one of their competitors using this product. So that's very interesting. When they start making traction in the US though, the stock's going to pop. There's one analyst on it. He's got an 80-cent target. My sense is that will be, if everything works out, that will be low, if it works out. But as things stand, they're cashed up and they have a massive opportunity because it's a big market and it's growing.
We've been looking at the stock here. It's actually has been performing a lot better lately, a little choppy, but up and to the right, which is what you want to see. So that's Seatt Mobile. Let's get back to some viewer questions here. Peter N. Bell and many others are asking about Kintavar exploration. We had a live stream with the CEO, Kirill Muggerman, several weeks ago. They have a gold property in, copper property primarily, and a gold property in Quebec. So update us here on Kintavar exploration.
Well, I was in Montreal this week and I had lunch with the CEO. I've been a shareholder for some time. They have a very attractive copper property. It's early stage, but it's not far from Montreal, so it's close to infrastructure. The CEO he's an interesting guy. He used to be an analyst. He's a geologist. He understands capital markets. He understands geology. And I'm not an expert in these things, but I've talked to enough of these people that when I first met him, I thought you talk differently and you think differently than the other guys do. Really an outside the box kind of guy. And that's what kind of led to this discovery. Nobody really looked there for copper because they assumed it wasn't there. He decided, I'm going to look there. He found it. And so here's what you need to know. They have a market cap of $25 million, $7 million in cash, enough to get through another year of drilling, I think. They've just finished some drilling. We're waiting for results. And if those results prove to be positive, this stock has traded much higher. It's going to go back to those highs, I think. And the holy grail in junior copper is you want that billion-pound deposit. That's when the big boys look at you. They don't look at you below that. And I've heard some scuttlebutt, not from the company, but from other people who say it's 2 billion. It's got the potential to be 2 billion based on what they've seen. So that's third-party opinion. But if that's true, then you're on the radar of the big boys. And that's the differentiator. That's because every junior mining company, their goal is to get bought by a major. They don't want to develop it. That's just fraught with risk, and you have to raise a lot of money. But you won't even get a glance unless you're big, and this has the potential to be big. If we were in a mining market, that would be a dollar stock, and it's trading at 25, 30 cents. So I like it. I own it. I'm a little underwater on it. I don't care because I didn't buy it to make 2 cents. I bought it to see it multiply. High risk, high return.
All right, let's roll through some other viewer questions here. Monica Tennis, for example, is asking about EVI. If you don't know that one, that is, will eventually be called Stillcana or is called Stillcana already. Full disclosure, I own a bit of this, so you would own a ton more than I do. But it's been on, they've halted the stock more than a month ago. So what's the latest on this story?
It's not unusual when you do an RTO to be halted. You're always halted, and the exchange has to look at the deal. And that can take weeks to months. It's not unusual. So Monica, don't worry. I spoke to the CEO 2 weeks ago, and at the time he was a little concerned about the state of the weed market, but I heard from him today, and he says things have changed, and they're looking at doing a big financing now. And so if that happens, it's a CBD play. By the way, I should tell you, they have product. And I've been taking their CBD pill, as has my wife, for about 3 months now. And there's definitely a difference. CBD there's something about it. It's an anti-inflammatory. There's a little bit of research out in scientific journals. There's more to come. So the product works. I've been taking it. I enjoy it. I don't like not taking it anymore.
You take it to sleep, don't you?
No, that one is more for joint pain. It's
okay.
More for, I play hockey, so you get sore. I'm definitely less sore. I'm a little bit faster. My wife has, that time of the month pain is not as bad and that sort of thing. Mm-hmm. So it's anecdotal. This isn't science, but I think that there's something there. I like their slogan. It says, I think 6 or 7% of people want to get high and 100% of people want to get well. And CBD has some very interesting properties. They are not a weed company in the sense of, THC. Their products don't make you high, they make you well. And so when the deal gets done, and it will get done, it just takes time. The exchanges are very backed up right now, obviously, so there's only so many deals they can look at a time. But the thing here is, if they get that financing, and the word I got yesterday was that it's looking much more promising than when it starts trading, it should pop.
All right, not everything can be a winner. We all know that as investors. So one that you recommended a while ago, we had it as a cover story. It's probably over a year ago now, Seatt Pro. And I do remember you said it could be a moonshot. we had this little graphic of a rocket ship on the cover. Hasn't worked out. And I seem to remember you saying that something happened with management. You were disappointed with the management team. So what happened there?
Yeah, they're actually based in my hometown as well, so I was able to spend time with them. And they're an extraction company. That's what they specialize in, and they have brilliant technology. And they actually make money in some quarters. They have revenue. They provide a vino, for example, with a key ingredient from oats that makes a vino cream, that gives it that anti-itch property. So they know what they're doing. And I was under the impression, and this is going back several years now, that they were going to get into the weed space and start extracting, from marijuana, pulling compounds out of it. And I asked the CEO, can you do that? He goes, oh, we could do it better than anybody. So I thought, oh, great, obviously you're going to talk about it at least. And they didn't. And one day I said, I went out for dinner with them and I said, listen, when are you going to start talking about, extracting from weed? Because the weed stocks are trading at huge multiples, and his stock had done reasonably well. It was trading around $2. And he told me, oh, we don't want to go there. And I was like, well, what do you mean? And he said, no, it's not our focus. So that was basically it. I think everyone was thinking, oh, they're going to start talking about weed, they're going to get into that business. They could have been a front runner because they already have the technology. If you look at other companies, Radiant, N-Wave, extraction technologies, they've done very well by shifting their focus to the marijuana market. These guys didn't do it. They're not capital market savvy, they're scientists. It's just one of those things. It's one of the risks you take when you invest. Do the people on this board and this management, do they understand the importance of promotion? And these guys don't. And so it's just, there may be a business that's worth something, but I sold it because I just thought, well, the easiest thing for you to do would be to investigate this and talk about it. Your stock would have gone to $10, but you didn't do it, so goodbye.
All right, we had a question on Seatt Pro, so thanks for that, and thanks for answering that, Fabrice. More of your questions and a few more of Fabrice's top ideas as we get set to wrap up the show. As we head to break here, we'll remind you about our special offer. It's a free 30-day trial to our premium weekly Capital Ideas Digest. You'll get free access to 4 new issues, plus access to our archive of digests, complete with investment ideas, replete rather, should be the word. The digest is usually reserved for our premium subscribers, so see what you might be missing by going to capitalideasmedia.com/30-day trial. That's 30-day trial. The day trial is lowercase. You're watching Capital Ideas TV Live with Fabrice Taylor. He's the founder and publisher of the President's Club Investment Letter. More ideas and your questions right after this.
Right now you walk inside a truck and you see multiple devices. You see a fleet management device, you get a 2-way radio, black box, tablet of some sort, front camera, $6,000 to $10,000 worth of equipment. We're shrinking down to less than $1,000 in one device. The change in the cabin is just dramatic. It's just much, much safer for the truck driver to be able to use one device. Really what we're doing is we're creating a new environment and a new technology that has not been seen to date in the market.
RavenQuest Biomid is really 3 things: innovation, science, and opportunity. Orbital gardens are really cool technology. We've now converted them to the point of which the plant rotates around a center light. What we have done is created the control technology and changes to some of these gardens which allow for more nutrient impact into the plants. So what it allows for us is to get high density within a very small space, which overall is going to lower our capital costs and our operating costs.
We feel like we're the wave of the future in terms of how people test for things. We anticipate being the first sample-to-answer instrument that can process up to 22 pathogens at a time. Whatever you want to test for, you can do it on your own. You don't have to ship it away to a lab. You don't have to have an expensive microbiologist. It's something you can do on site. You collect that sample, you input it into the machine, you hit a button, an hour later you get the result you're looking for.
Welcome back to Capital Ideas TV, live with Fabrice Taylor, the founder and publisher of the President's Club investment letter. Put your questions in the chat section. Many of you have done it already on the right-hand side of our YouTube channel page. And just before we get back to some of your picks, so President's Club has been, shall we say, dormant for a while?
I haven't been very active
Yeah.
because, you know, the weed stuff, weed's been very good to me. I shouldn't be too harsh. But I didn't really, I could see what was coming. It was going to suck a lot of money away from a lot of things, and I didn't want to fight that tide, and I didn't really want to recommend a lot of weed stocks because I knew that a lot of them just weren't worth buying. So I took a little bit of a break, had a good run there for a while, but I like the market now. I think the market is changing. It's becoming more of a stock picker's market. I think that a bottom-up approach to things, which is what I prefer, is going to work well as the markets move sideways. And I like stories that are independent of the indices. I mean, everyone always asks me, what's the market doing? And I say, I have no idea what the market's doing because I don't care. I don't buy what they call beta, which is the market's move. I'm more interested in bottom-up ideas with catalysts of their own that will move the stock regardless of what the market does. And so I feel like we're heading back into that. So it's a good time to start looking at things again.
All right, very good. Good time to look at your next pick here. This is Colabor Group, and it was over a year ago we had this as a cover story of Capital Ideas based on your recommendation. It's a food distributor out of Quebec, been around a long time, and the stock pretty well doubled. You see it there on the chart, and it went from 70 to about $1.45, and then it stopped hitting its numbers. The story went sideways to down, but it has been recovering a little bit lately. And you say that they basically cleaned house. Is that what happened over there?
Yeah, like I have this is a turnaround story, so it checks off all the boxes. Boring industry, been around forever. Been around forever is important. You know why? Because then you can go back 10 years and analyze their financials. They haven't changed. They do the same thing they did 10 years. They sell ketchup and hot dogs and whatever, meats and fish. That doesn't change. People always eat. They don't really change their diets. So I like stable, boring businesses. Had been a much higher stock price, $14 paying a dividend before this went on this acquisition binge with a ton of debt and blew up. And then they also did a rights issue and raised money and paid down debt. Usually checking those three boxes, typically that works. And it did for a couple of quarters, and you can see I recommended it in the fall of 16, around 80 cents, and it almost doubled. And then a couple of good quarters, but then the wheels fell off. And what happened, I learned subsequently, is that they did well on margins because they cut costs too much, not because they were doing better business. They just cut too deeply, and that hurt them in the future. Down the road, that actually came back to bite them because they cut people, they cut incentives. And so those margin improvements were ephemeral and illusionary. Since then, they have gotten rid of almost everybody. They got a new CEO, a new CFO. The chairman's come in, and they're all buying stock. The guy who's taken over Ontario for them, who is a real veteran of food distribution. He worked at Tim Hortons, at Cisco. You know, these guys are coming to this company because they see an opportunity to buy stock or get an option package that will pay them very handsomely. They're not here, they're all wealthy guys, okay? So I was early. But I've spent the last several months, reloading on it. And the stock, what happens when you're in a turnaround is at the bottom, you kind of flatline, right? And the smart money is buying it kind of on the way down, including the insiders. So when you start to flatline, there's no stock available. No one wants to sell it because the guys who bought it don't want to sell for a dime. They want to sell at $2. They don't want to sell it they've paid 40, they don't want to sell at 50 or 60, they want to sell at $2 or $3. The smart money. I think we're there or we're close. I'd like to see another couple of quarters. They made a penny a share last quarter. They had net income. They're still generating cash. But I feel that this is a good time if you want to buy a lot of stock. If you don't, if you're only going to buy 10,000 shares or whatever it is, wait. You might as well wait a quarter or two because you're still going to do really well. You'll pay more for the stock, less risk, and you'll still do well. That's the nice thing about turnarounds. Myself, I need to build a position. The other way you can play this is they have listed debentures. They're convertible debentures. They pay 7%. You can buy them at 75 cents on the dollar. And they're coming due in the next 18 months. So the return on those would be about 32% if you buy them. So I own some of those as well. And that's a safer way because then you're ranked above the equity holders. Less return, but much safer. Maybe a combination of the two. I do think that, though, this is going to be the year for Colabor.
All right, we'll keep an eye on Colabor Group. Another one we're keeping our eye on. Another top pick here from Fabrice is Helios Medical. We've had the CEO in here before, Phil Deschamps. We've done a cover story on Helios Medical. It's been overall, since you started talking about it, a very good story. They've got this device that is put in the patient's mouth, and through physical activity, it can stimulate assistance and recovery for the brain, for brain disorders and so on. So we're still waiting for FDA approval, and we've always thought it could come any moment. So where do we stand now with Helios?
So yeah, I've been in this one for almost 3 years now. Recommended that they split their stock, they reverse split it. So my recommendation was at the equivalent of $6. It went as high as 25. You can see on the chart there. I think that when we get FDA, it goes back to that level, maybe higher. It's a $1 billion business if they can sell it in the States with FDA approval. They got Health Canada in the fall. So you have to think that that makes the odds of FDA even better. Stock's been a little weak lately, but they did a financing recently, and I think people are just clipping the buck or buck and a half that they made off that. FDA window ends on February 1st, so there was a range of dates, and the last day is Feb 1st. It's not a deadline, they could go beyond that, but that's generally when you get approval. Here's what you need to know: it's safe, there is no danger. So that's a big thing for FDA, and if it's safe, it passes safety. It's an unmet need, so traumatic brain injury really has no treatment, and this affects your gait, your walk. When you look at the before and after videos of patients, it's incredible. They can barely walk, and then after 6 weeks on this, they can almost walk perfectly.
Well, Montel Williams is a big spokesperson for them. He's the talk show host, and he has MS, and he swears by it.
He has MS, and he was about to go into a wheelchair, and he heard about this. And the story is, I've never met him, but the story is that he went to the lab in Wisconsin. I've been there too. And he was there to debunk them. He was angry because he thought, you guys are just selling snake oil. And they said, well, just try it. And he did a treatment, and I think a year later he was heli skiing. Now these are anecdotal, this isn't science, okay? But still, anecdotes do matter. So if they get it, think about workers' compensation claims. And this is what Phil, the CEO, is going after. Guy has traumatic brain injury from whatever, a bar fight, a ski accident, whatever it is, a football player. He's on workers' compensation. They're paying, collectively hundreds of millions a year to people who just can't get better because there's nothing for them. Imagine how much they'd be willing to pay, how eager they'd be, and how happy they'd be to try this out. So it's a $1 billion revenue business on MS and TBI alone. There are other possibilities, Parkinson's. So if you're a trader, you maybe buy some stock, and if it pops, you can sell it for a gain. Obviously, if it gets declined, which I think is unlikely, but if it does, you're going to lose money. But as a trader, it pops, you buy it, or as a long-term investor, because I'll tell you one thing, if they get FDA, this is a business. It's an actual business that has revenue, and they're preparing for that right now. They've got clinics in Canada already doing business, and they're going to get some revenues out of those this year. It's pretty high margin revenue too. It's actually very high margin revenue. So I'm bullish on this. Again, higher risk, higher return, but the stock price can multiply.
Okay, your top picks today: Helios Medical, Colabor, Athabasca Minerals, Clean Seed Capital. You talked about Gratomic, and what was the other one? There was one missing there. I thought we had 6. Anyway, I'll find that one. So we've gone about an hour here. We're going to try to do a little rapid fire round as we wrap things up, and give you some of the names here that you've been asking about. And I know Fabrice can talk about some of these, such as Hilltop Cybersecurity. We talked to that CEO several months ago, and that had a blockchain angle to it, as I remember.
Yeah, so you see stories every day about companies getting hacked and losing data, and it's usually big companies. It happens to small companies too. That doesn't hit the headlines, but it costs a lot of money. Small businesses get hacked and they get ransomed typically, and then someone calls and says, give me 25,000 or 100,000 Bitcoin, or else I'm going to take your data and destroy whatever it is. So somebody was pitching me this, and I called the CEO, we spoke, and I liked him. He's an interesting guy. He's a West Point graduate, disciplined, smart. But I said, I need a third party. I need someone who's, who can tell me that what you're saying is true, because I don't understand. I'm not smart enough. I don't know this stuff. And there's a guy who's kind of like the guru of this stuff, and I checked him out online. And I called him, and we spoke for an hour. And he said this is a very good product. He's I guess he's a bit of an advisor to the company, but he certainly wasn't. It wasn't a glowing testimonial. It wasn't just kissing butt, if you will. It's a very good product. There are other products that are good, but he said this one's good, and he says it's ready to be commercialized. So I haven't bought the stock yet. I want to talk to them more. I want to understand it better. But I'm interested because when you get that third-party endorsement from somebody who is paid by other companies to advise them on what to use, he knows his stuff. And so all I can tell you is a guy who is largely impartial tells me that, yeah, this is the real thing and it's ready to be commercialized. So that's all I can say about that for now. I've got more work to do on it, but we'll see.
Why don't we wrap it up with your comments on iCarrot? We've talked to the CEO. We have a video coming out soon with the CEO, Adam Sajelski. And they have a very interesting, it's called Bonovi, the platform for functional vision care, which goes beyond traditional eye testing.
Yeah. Well, they've been working on this, perfecting it for a long time, and it's basically ready. And the reason I know it's ready is because you have to go and see the testimonials that they have from experts in the field, from athletes who have used it. There's one of the New Jersey Devils players, I forget his name.
Bryce Salvador.
Right, Bryce Salvador.
He's an advisor for them.
Okay, so he gets a concussion, has to quit hockey because concussions affect your vision. And he hears about this and he tries it out and it works. And he goes back to playing hockey and wins the Stanley Cup, right? So that's a great story. And there's dozens of these things. And I was really impressed. So they've raised some money now and they feel the product is ready. And now they have $4 million to go start delivering revenue. And I think you're going to see a pretty big uptick in revenue this year because there's a lot of people out there saying this works. So I invested on that basis. The market cap is next to nothing, getting back to my theme of nobody cares because it's not weed, but they will care eventually, and when they do, the stocks are going to move. And when they see revenues going from $500,000 to $3 million or whatever it is in a year, and then from 3 to whatever, then these stocks are going to move. So buy them when no one cares, sell them when everyone cares.
And the other topic of Fabrice today, the one I did not mention a while ago, Seatt Mobile. So let's wrap it up there. Lots of great questions. Thanks for taking part. Thank you, of course, Fabrice. You've been talking nonstop for more than 2 hours now. You're on BNN today as well.
Good thing I love the sound of my voice.
So yeah, lots of great information. We'll do it again. And thanks again. Appreciate it.
My pleasure.
Okay, as we wrap things up, a reminder of the special offer from Capital Ideas, a 30-day trial. This gives you immediate access to our premium weekly digest. We're so much more than video. These are the research-based, actionable investment ideas that are reserved for our paying subscribers. You'll get access to 4 issues. You can find out what you're missing. Just go to capitalideasmedia.com/30-day trial. So thanks a lot for watching and taking part in this special live event. If you missed any part of the show, you can watch it on our website or on Capital Ideas TV YouTube channel. You're watching it right now. It's going to sit there and live and breathe. You can watch it anytime. We'll also have a podcast version of this show coming up next week. Bye for now. Take care.